Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello my dear students, welcome back to First Commerce Accountancy online classes. Dear students, we are discussing about the concept of journal entries. Let's move to solve the next sum relates to journal entry. The question is like this: journalize the following transaction of Swaroop traders. Transactions are 2018 March 2nd, business started with cash rupees 1,50,000. March 3rd, purchased goods for cash rupees 10,000. March 4, goods sold to Suma rupees 20,000. Goods returned from Suma, here goods returned from Suma rupees 2,000. Cash received from Suma in full settlement of her account 17,500. March 7, paid wages rupees 1,000, and March 8, paid rent by check rupees 5,000. March 10, draw for personal use rupees 3,000. March 11, salary outstanding rupees 10,000. In this, few transactions are new for you. Let me to explain this. See, first one, business started with the cash and goods. It is considered as compound entry because here more than two accounts are involved. So we need to pass compound journal entry here because three accounts are, means multiple accounts are debited. Multiple accounts are debited here, like cash account and goods account are debited, capital is credited. Purchased goods for cash, very simple. Here goods sold to Suma. Goods sold to Suma. So here see, when person name comes in the transaction, then it is considered as credit transaction. Correct, right? So this transaction is considered as credit transaction. Instead of receiving cash, one more account is increased in that organization. That is what here goods sold. We sold to Suma. So that's why we are we not yet, means organization not yet received the amount. In future it will receive the amount rupees 20,000. So it is considered a debtors for the organization, asset for the organization. Okay. So and the next day goods returned from Suma because of some damage or any other because of the demerits or disadvantage of that particular product, goods returned from customer to the seller. So that is how much? Rupees 2,000. And here one is sale, okay, one is purchase, another one is here considered as sales return and Suma. Actually Suma is the debtor for the organization. Decrease in debtor and increase in decrease in sales return, means sales return is also comes under revenues account. Sales and sales return are both comes under revenues account. Sales is considered as increase in revenue, whereas sales return is considered as decrease in the revenue. Actually 20,000 receive ಮಾಡಬೇಕಿತ್ತು, now 2,000 worth return ಆಗಿದೆ. So now the total debtors value, total debtors amount is rupees 18,000. Okay. So because 2,000 worth returned to the seller of goods. So goods returned from Suma rupees 2,000. Decreases in revenue. Decreases in revenue is to be credited. So here and again Suma means debtor, decreases in debtor. Okay, decreases in asset is to be debited, decreases expense revenue ಅಲ್ಲಿ pass ಮಾಡಬೇಕು entries. And March 6, cash received from Suma in full settlement. Cash received. So here received means when we receiving some amount or receive at the time of receipt of commission or any other interest or dividend, our income shows greater value. So that is what cash shows increased value. So cash account is debited, and the next one is Suma. Suma is debtor. Now debtor account nil agatte. Okay. So decreases in asset is to be credited, and one more 17,500. Actually she has to pay 18,000, but by paying 17,500 she closes her account. Means business gave 500 rupees as a discount. So discount allowed account comes. So discount allowed account is considered as expense for the organization. If you are allowed discount to any customer, then it is expense to you. So the increases in expenses is to be debited. So cash account is debited, and the next one is discount allowed account debited to Suma's account. Suma is a debtor, so complete reduction in debtor's account considered as credited. And paid wages and cash. Paid rent by check, here by check, rent and bank, okay, rent to bank account. Drive for personal use, if the owner of the business withdraw any amounts from the business organization for his personal use, then it is considered as drawings. So drawings and cash account, okay. And the next one is salary outstanding. Salary outstanding means what? Last month's salary not yet paid. So it is considered as liability for the organization. So salary outstanding, how we can record? Salary means expenses. Increases in expenses is to be debited. Okay. Again, one more account here is outstanding salary. One is salary, another one is outstanding salary. Salary means expense. Outstanding salary comes under liability. Salary comes under expenses account, whereas but outstanding salary comes under liabilities. Okay, so increases in expenses is to be debited. Again, outstanding salary considered as liability. That liability also shows increased value because last month's salary not yet paid. So for that reason it's considered as liability for the organization. Increases in liability is to be credited. So how we can record? Salary account debited to outstanding salary account. So the first one, business started with the cash. So how we can record here? 2018 March 2nd, business started with the cash account debited to capital account. Narration, business started with cash. Amount, here cash and goods. Business started with the cash and goods. So we need to pass compound journal entry. So cash account, here goods is considered as stock again. Stock account debited to capital account. Narration, business started with cash and goods, means cash and goods. So 1,50,000 here, 1,50,000. Clear? So, close the entry. Next one, purchased goods for cash, rupees 10,000. Purchased goods. What are the two accounts involved in this? March 3, purchased goods. One is purchases account, another one is cash account. How? Purchases is considered as expenses here. To purchase goods, we have to pay cash. So one more account affected here is cash account. So see, purchases and cash. Cash shows decrease, purchase considered as expense, increase value, cash comes under asset, decreases in asset is to be credited, increases in expenses is to be debited. So, purchases account debited to cash account. Goods purchased for cash. Costing rupees 10,000. Close the entry. And next one, goods sold to Suma. Goods sold to Suma. Here two accounts. What are the two accounts? One is Suma, another one is sales. Because why here Suma comes? Because this transaction is credit transaction, considered as credit transaction. So Suma means here debtor comes under asset, shows increased value. Sales comes under revenue. Sales is considered as revenue and it shows increased value. So increases in revenue is to be credited. Increases in asset is to be debited. So, Suma's account debited. Suma's account debited to sales account. To sales account. Sold goods. Date March 4. The next one, goods are returned from Suma. When sales credited, then sales return is debited. It has a logic because increases in revenue is to be credited, right? Same way, same type. Here, write the amount first. Goods sold to Suma, 20,000. Okay. Increases in revenue is to be credited. So, we credited here. Sales return means for the organization that is considered as what? Decreases in revenue. Actually 20,000 ಬರಬೇಕಾಗಿದ್ದು ಈಗ 2,000 ಕಡಿಮೆ ಆಗುತ್ತೆ. Only 18,000 we have to receive from customer. So that's why it is considered as, it is treated as decrease in revenue. Decrease in revenue is to be debited. So decrease in revenue is to be debited. And one more, Suma is considered as debtor, means asset. Decreases in asset is to be credited. Like that we have to pass the journal entries. Okay. So March 5, goods returned from Suma. Goods returned from Suma. Two accounts. One is Suma because she is debtor for the organization. Debtor shows decreased value. So debtor means asset, and one more is goods returned from Suma. We sold goods to Suma, so it is considered as sales return. Suppose we purchased from Suma, then we returned to Suma, then it is considered as purchase return. But now in this case we sold to Suma. We sold goods to Suma, and after that Suma returned goods to Swaroop traders, so it is considered as sales return. Once we sold the same product or same goods returned to the owner or returned to the business organization, so it is considered as sales return. Sales return. So one more account is sales return. Sales return comes under revenue only, but it is treated as decrease in revenue. Decrease in revenue. Sales increase in revenue, whereas sales return decrease in revenue. So decreases in revenue is to be debited, and decreases in asset is to be credited. So we should record sales return first because debited. Sales returns account debited to Suma's account. To Suma's account. How much? 2000. Goods returned. Goods returned from Suma. Close the account. Okay, move to, it is a continuation. Date, okay. In the next transaction is cash received from Suma in full settlement of her account rupees 17,500. Rupees 17,500. See, 20,000 minus 2,000, 18,000. Actually, Swaroop traders have to waiting to receive 18,000 from the customer, okay, from Suma, but now again the business organization closes Suma's account just by receiving 17,500 rupees. That 18,000 minus 17,500, that 5,000 deviation is considered as discount allowed. Discount allowed. Whether discount allowed is expenses or income for the organization, it is considered as expense. So increases in expense. So that transaction is also a compound journal entry, relates to a compound journal entry like cash received. So one account is cash. One account is cash, another one is received from Suma, received from Suma. So Suma is debtor, but that debtor completely shows completely reduced, okay, in the by because organization received amount from debtor. So and after that discount allowed. Discount allowed. Discount allowed is considered as expense. So now cash asset, Suma also asset, discount allowed is expense, okay, and here increase in asset is to be debited. So cash account is debited, cash account debited. Suma's account, Suma is asset, shows decreased value, decreases in asset is to be credited, okay, later we can record that transaction. Discount allowed is expense, increase in expense, increases in expenses is to be debited. So discount allowed, discount allowed, account debited to Suma's account, Suma's account. Cash received from Suma and allowed discount, and allowed discount. Date March 6. How much received? 17,500. Discount allowed 500. Suma's account 18,000. 18,000 like that. Okay. So it is compound journal entry. And next one, paid wages. Very simple. Wages account debited. Wages account debited to cash account. To cash account. Here we can write wages paid. Wages paid. Date March 7, rupees 1,000. And next, paid rent by check. Paid rent by check. Already I told that if check comes in the transaction, then that transaction affects to bank account. One is rent, that is what expense, increases in expenses is to be debited, and one more account is affected here is, that is what bank at the time of payment, bank shows reduced value. So check treated as bank account is to be credited. Decrease in asset is to be credited. So how we can record here? Rent account debited to bank account. Paid rent, narration, paid rent by check. Paid rent by check. Amount 5,000. March 8. Okay. And next one, drive for personal use. Drive for personal use. Already I told that personal use means what? Drawings. If owner withdraws any amount from business for his personal use, then it is considered as drawings. Drawings, how we can record the drawings here? Drawings comes under capital account. Drawings comes under capital account, decreases in capital. Okay. So here when we withdraw some cash from business organization, our capital shows decreased value, and also cash also shows decreased value, correct, right? So decreases in capital is to be debited. So here drawings account debited to cash account, because decreases in asset in the form of cash, decreases in asset is to be credited. March 10, drawings account debited to cash account. Here we need to apply the rules of capital, and here we need to apply the rules of asset. And narration, withdraw cash for personal use. How much? 3,000. Close the account. Next, last one, March 11. Salary outstanding. Salary outstanding and salary account. So here two accounts. One is salary, another one is salary outstanding. Salary is expense. Increase in expenses is to be debited. Salary account debited. One more is outstanding salary account. Outstanding salary account is considered as liability, whereas increase in liability is to be credited. So, 2. Outstanding salary account. Salary outstanding. Amount 10,000. Next, totally 1,50,000 plus 10,000, 1,60,000 plus 20, 1,80,000 plus 2,000, 1,82,000, and here 18,000, 1,82,000 plus 18,000, 2 lakh plus 1,000, 2 lakh 1, 2 lakh 6,000, here 2 lakh 9,000 and 10,000, 2 lakh 19,000 is the total value. So this is a process to record the transaction in the book of journal. So firstly, we should analyze the transaction. We should read the question carefully After that, we should find out the accounts involved in each transactions. Then we need to classify the account. Then we should analyze that whether it has increased or decreased. Then very simple, we need to apply the rules of debit and the credit. Before that, we should know the rules of debit and credit of each accounts: assets, liabilities, expenses, revenues and capital. Then only we can pass the journal entries. Okay. So here only few transactions are new. One is return, goods return, that is sales return, and here full settlement, that is what cash discount allowed. Okay. And here when check comes, we should consider this transaction affects to bank account, personal use, drawings. Salary outstanding salary is considered as liabilities. Thank you for watching this video.
Don't forget to like our video and subscribe our YouTube channel for all the updates.